the moment the business cycle picks up, everyone has spare cash. Cash gets recycled into assets. People move further out the risk curve. So altcoins are exactly the same as credit spreads, small caps, emerging markets, junk bonds, all of this, they're all exactly the same thing. They're further out the risk curve. The business cycle actually drives all of it. It's also the same with fine wines. It's also the same with Rolex watches, all driven by the same thing.
As demonstrated by its recent rise above approximately $97,000, the highest level it has reached since February, Bitcoin is quickly regaining strength. Furthermore, it is getting closer to setting a new record high. A notable supply-side squeeze is one of the main causes of this increase. Recently, the quantity of Bitcoin held on centralized exchanges has dropped to 1.42 million BTC, the lowest since 2018. This suggests that investors are opting to hold their coins for a longer duration and are taking them off of trading platforms. As a sign of strong conviction and less sell-side pressure, there are currently over 18 million Bitcoins held off exchanges, while major holders like Tesla and Coinbase show no signs of selling their holdings. Key institutional players like Michael Saylor of MicroStrategy, whose company controls more than 2% of the total supply of Bitcoin, continue to amass. The demand from both institutional and retail investors is rising during this time. Spot Bitcoin exchange-traded funds, ETFs, have invested over $40 billion in assets, and major financial institutions like BlackRock, Fidelity, and ARK Invest have taken sizable positions in the asset, demonstrating a deep and sustained belief in it. Technical analysis indicates that Bitcoin is currently following a rising trendline after breaking above significant resistance levels. This lends more credence to the idea that a breakout to a price of $100,000 or more is getting closer to happening.
Every time the total global liquidity index breaks out, again, the same thing with M2, the market goes higher. And the reason being is I talked about the correlation. Well, here's the chart. It's a 90% correlation with weekly global liquidity. That's Bitcoin. And the NASDAQ is a stunning 95%. And so it's hard to refute that this is not what is happening. It's so obvious, but most people want to refuse to believe it. They start mid-curving the whole thing, saying, well, that's not the printing of money, and this is not how it is. It's so clear in the data. It's so obvious that this has been going on. And even when you listen to Scott Bessent speak or Janet Yellen speak, they all talk about this. They talk it about in the terms of basically the everything code framework. Business cycle. Business cycle is currently weak. The business cycle is the most important cyclical factor. It drives, it's part of the global liquidity construct. So the business cycle actually came out today or yesterday at 48.7, slightly weaker as we've been expecting. Bitcoin's already priced it down to 47.4. So Bitcoin's already priced in the bad news. But the good news is financial conditions lead it by 9 months. It's a very useful tool. And it's telling us that we're going to see the business cycle pick up super strong. And this will keep going. I think we'll end up in the 60s. It also prices Bitcoin by doing this. And so when you look at Bitcoin itself, the moment the ISM, we've had this very low period of ISM, and that was driven by this very flat dollar, and also by rates staying higher than normal. But as the ISM starts crossing 50, economic growth comes back, earnings come back, household earnings come back, stuff gets reinvested in markets. So at this point is when Bitcoin super accelerates. And that point lies ahead. We're about to see that point now. Now, I haven't shown it on this presentation, but we've also imputed how it reacts to ISM. And if we get to that 57 ISM, that puts Bitcoin at 450,000. Is it exact? Will it be exactly that? No. But all of the people who are saying it's going to 150, 250 are probably scarred from last cycle without looking at the forward-looking data. So it's incredibly positive for me. It also is what drives altcoin season. So the fabled altcoin season, everyone's like, it's never going to happen again. It's just a function of the business cycle. Why? Because household earnings are still subdued, because the business cycle is subdued. Average businesses outside of technology have subdued earnings. The moment the business cycle picks up, everyone has spare cash. Cash gets recycled into assets. People move further out the risk curve. So altcoins are exactly the same as credit spreads, small caps, emerging markets, junk bonds, all of this, they're all exactly the same thing. The further out the risk curve, the business cycle actually drives all of it. It's also the same with fine wines. It's also the same with Rolex watches, all driven by the same thing. So we all want to see the ISM above 50. We've got the forward-looking data to say it's going to happen pretty soon, and that's going to be a very big signal to us. Usually that will happen as Bitcoin starts breaking all-time highs, which we imagine should happen pretty quickly, because that's every time that happens when we start to see these liquidity conditions. But the problem is nobody believes me.
That's true.
Everyone's like, no, but the markets and Trump and tariffs and geopolitics and China and then Russia and it's all the, and what you've all done is price in maximum fucking fear. At every point, you've got, this is number of stocks with a 40 days RSI below 30. This was before the rally really started. One of the few ever, this is the same as we had at COVID, when the world shut down. It's the same as the Russian default and the Asian crisis. People are crazy with fear. Investor intelligence survey, percentage bullish, all-time record lows. The least bullish people have ever been in history. And the forward-looking indicators tell you the economy is about to explode higher, and people are massive bearish. What was interesting is we just saw the charts coming out today, was that retail investors had been buying the dip. Institutions still haven't. They're all massively underweight.
Furthermore, a noticeable change is taking place in the broader discourse surrounding Bitcoin. As interest rates have stabilized and inflation has decreased, risk appetite is returning to markets, fostering an atmosphere that supports the rise of high beta assets like cryptocurrencies, as previously apprehensive institutions now pour money into regulated vehicles like exchange-traded funds, ETFs. The perception of cryptocurrencies is changing from one of a speculative fringe to one of a strategic portfolio inclusion. This surge in legitimacy is creating a feedback loop of confidence that is pushing prices higher and strengthening bullish sentiment. Bitcoin is once again viewed as a technology-driven growth asset, in addition to digital gold. This is taking place as traditional markets start to expand and liquidity rises. Strong accumulation trends are evident on the chain, and the halving has already been finished. The parabolic banana zone phase of the cycle, which is marked by gains that accelerate quickly and sentiment that becomes self-reinforcing, is thought by many analysts to be approaching.
Consumer expectations for declines in stocks near all-time record highs. The VIX index, the measure of fear of volatility in the index, in the top 3 spikes of all time. And again, using my DMARC indicators, it's generally a reversal pattern. So quickly, to go through the charts, this is the most important chart for you to understand, is that corrections are normal. You've just gone through a normal correction, and you've managed to lose your minds, which is hilarious, because we've had 7 of these. And last time around, they were bigger. Back in 2017, 28%, 39%, 38%, 27%. Nobody remembers any of those. In fact, none of you remember any of these. Some of you remember this summer because it was pretty miserable. But that one, do you remember that? Or that one? No. But each time you convince yourself it's never going to happen, it's all over, we're never going to make money. And in 2017, you did the same. And it just kept going up. Remember, 23x in that whole moment of you going, oh, it's all over, we're never going to make money. And me selling out somewhere here, thinking, yeah, I'm really smart. No, I was a moron. So again, using DMARC indicators, these have worked stunningly well because Bitcoin's now up here. These 13s, cluster 13s, lows. We had them in Solana as well. This chart is hilariously out of date. This was the hourly chart of SUI. When I said, listen, if it breaks this inverse head and shoulders and the hourly should be up, well, now it's up somewhere above the top of this chart already. When I look at the chart pattern of SUI, it is a wedge pattern. Again, we're way up here. We're just short-term consolidating now. My guess goes to all-time highs pretty soon. It's a very bullish backdrop. Again, another hilariously out-of-date chart. I've been using the SUI versus Solana chart as my kind of compass of, what's the strongest performing horse in the race. And this is what made me allocate all of my money, essentially, to SUI. And it's now up here. So that's how fast things move. The weekly chart, you can see it was this breakout here that allowed me to think, okay, this is going to be a game for SUI to play that should outperform Solana, which is an amazing project with a fantastic community, great technology. This is the faster horse. So that's how I look at things. The other one was interesting. Again, another hilariously out-of-date chart is Deep. Deep exploded out of this. Deep is, if people don't realize, I just got it from the asset management firm that I run. Deep was the best performing crypto asset of the top 300 in the last month. It's outperforming SUI too. I mean, this is amazing. Well, it makes sense, right? This is the liquidity layer. Of course it will. And it's earlier stage, and it's so highly correlated. So, the whole ecosystem is looking amazing. You've seen here, you've been here, you've seen everybody talk. You've heard from all the builders, you've heard from all of the co-founders, you've heard from everybody why people care about this. It's not about the charts. The charts just reflect everything that you guys are all doing here, and it's an incredible job. The excitement of what's happening here today and over the last few days, everybody should be proud of. Everybody should be proud of what's been built, and the vision that these guys are executing on is simply stunning, and the market is paying attention. Well, Russ, this is hilariously out of date because it's up here now. So everything is broken out. Everything in the entire ecosystem is broken out. All of crypto is breaking out. Because of the energy and what's going on here, we happen to be the fastest horse right now. Is that a guarantee? No, it's not. But, I just follow the money. I follow the liquidity flows. I follow the charts. I try and make the best asset allocation decisions I can. And the best one I can think of is we're in the banana zone. So the banana zone comes in phases. I'll show you that in a sec. But basically, in that correction, using a simple measure, RSI, we got to hilariously oversold. What normally happens afterwards, period of sideways consolidation, break higher. We've just had the sideways consolidation. This is what happens if you put all of those periods together, create an average. That looks the same as the liquidity chart. It's all the same thing, right? It's all telling you exactly the same thing, which is the banana zone is upon us. That's when the dollar had this massive move. It was a 4 standard deviation move, one of the largest, fastest moves in the dollar's history. What happens after that? Well, after the red line, number go up. People say, well, we must be near the top. What happens when we're near the top? This is everyone's fear, always. Near the top, we're nowhere near. Our cycle top indicator is a long way away from anywhere. In fact, we're at very subdued levels, much like we had in 2013 before the largest bull run of all time. Now, I'm not guaranteeing that, but I'm just saying, probabilistically speaking, things are very positive going forwards. I see no reason for any fear.
One of the most heated discussions in the cryptocurrency space has been reignited by Edward Fina, CEO of Alpha Lions Academy. What would happen if Satoshi Nakamoto's true identity were ever made public? In a widely shared post, Fina suggested that such a disclosure might cause a major financial and psychological shock to Bitcoin, which might lead to the cryptocurrency's collapse, while other tokens, like XRP, might see rapid growth. His graphic representation showed a dramatic red Bitcoin candlestick plummeting as XRP surged upward. This was intended to communicate the idea that Bitcoin's decentralized philosophy and market dominance are safeguarded by the mystique surrounding Satoshi. If that mystique were to be broken, it might cause confidence to be shattered, especially if it was connected to centralized control, regulatory exposure, or government entities. Many people in the cryptocurrency community rejected this scenario as unrealistic or overly dramatic, but it did lead to a renewed discussion about the background of Bitcoin and the institutional concerns about its anonymity. According to some, Bitcoin is still the market's fulcrum, and if it were to crash, no other cryptocurrency, including XRP, would probably be able to escape the consequences. However, some people embrace the conversation as a reminder of the psychological stories that support the worth of cryptocurrencies. Whether or not the truth is discovered, the conjecture demonstrates how profoundly the ecosystem is still shaped by its enigmatic origins and the stories that surround them.